Good morning, and welcome to the Leap Podcast, your concise, level-headed crypto market update from Leap Digital Investments. I'm Patrick Penn. It's Friday, the 16th of January, 2026. The market is experiencing mild pressure amid broader macro uncertainty, with Bitcoin trading at $95,397, down 2.17% over the last 24 hours. Ethereum at $3,293, down 2.55%, and Solana at $141, down 4%. Price action remains choppy but contained. No widespread panic, though sentiment has cooled off from early January highs. Listen for the summary at the end. For now, let's leap in. Bitcoin down 2.17%, pulling back after a solid recovery from the 89,343 low on the 8th of January to a peak of $97,705 on the 15th of January, a roughly 9% bounce from the 90K consolidation zone. Short-term holder dynamics and leverage flush continue to weigh, but institutional conviction appears resilient. Positive leading tailwinds. ETF inflows stayed robust with 849 million on the 14th of January, the highest single day since October 10. And BlackRock alone captured 646 million. OG long-term holder selling has eased dramatically, dropping from 2,300 BTC to 1,000 BTC on the 90-day average, signaling sustained conviction. Institutional demand is outpacing new supply roughly 6x, with 30,000 BTC purchased versus just 5,700 BTC mined so far in January 2026. Germany's DZ Bank, with 760 billion assets under management, has approved Bitcoin trading services. Dartmouth's disclosure of over 10 million in BTC exposure continues the trend of university-level adoption. On the cautionary side, open interest has declined 30% from its October 2025 peak, reflecting leverage being flushed out. Net holder count dropped by 47,244 over the 3 days ending January 14th. Despite these, downside looks buffered by strong ETF demand and long-term accumulation. Ethereum down 2.55%, consolidating in the 3,100 to 3,300 range after rallying from the 3,058 support to the 3,386 resistance this week. Fundamentals remain solid amid network strength. Positive catalyst. Staking has reached an all-time high with nearly 30% of supply locked. Mainnet activity hits records at 2.32 million daily transactions. Q4 2025 stablecoin volume achieved an all-time high of around 8 trillion. Spot ETF inflows were strong at 175 million on the 14th of January. Bitmine's chairman is pursuing shareholder approval to 5% of ETH supply. Currently, they've got 4.17 million ETH valued at over 13 billion US dollars. Bearish notes. L1 fees fell sharply by 85% in 2025. Great for users and adoption, but pressuring network revenue. The ETH BTC ratio stays weak despite underlying positives. Lower volatility indicates relatively muted trader interest compared to other majors. Overall, ETH appears range-bound, but supported by staking and sentiment layer trends. Solana down 4% over 24 hours, but remains the strongest weekly performer on fundamentals, climbing from the $133 range to highs near $147 before the pullback. Positive catalyst. RWA, or Real World Asset Ecosystem, TVL crossed 1 billion for a new all-time high. Solana leads all L1s and L2s in 24-hour DApp revenue and DEX volume. ETF inflows reached 23.6 million on January the 14th, the largest single day in 30 days, with Bitwise leading at 20.9 million. Solana reclaimed the number one spot for weekly network revenue after 11 weeks. Bearish notes. ETF flows, while growing, remain modest relative to Bitcoin and Ethereum despite superior on-chain metrics. The Trump administration has shifted from initial post-election optimism to headwinds. Crypto legislation has stalled, with the Senate Banking Committee postponing the market structure bill markup after Coinbase withdrew support over ethics concerns and pay-to-play optics. Democrats are raising alarms about regulatory conflicts tied to crypto executives' financial links to Trump. The Trump-Powell feud is escalating, with attacks on Fed independence creating uncertainty. Bitcoin briefly showed a safe haven-like behavior during risk-off moments, but has since softened. Federal Reserve outlook remains neutral. Powell faces political pressure, with global central banks backing independence. Inflation remains sticky, not cooling fast enough for aggressive easing. Rate cut delays sustain pressure on non-yielding assets like crypto. Iran-USA geopolitics resolved for now. Midweek tensions from Trump's threats over Iran's protests crackdown triggered brief risk-off flows, hitting alts harder. But rhetoric cooled on January 15th. Oil dropped and equities hit records. Net neutral weekly impact, with BTC outperforming initially. Behavioral signals show loss aversion persisting amid minor drawdowns, but volatility could spike on unresolved catalysts like bill progress or Fed signals. In summary, short-term choppy consolidation dominates. Profit-taking, leverage flush, retail capitulation, and macro legislative uncertainty creating overhead pressure, while institutions continue scaling in on multi-year horizons. Unless a major risk-off event emerges, this period looks more like a consolidation phase, with sentiment likely to hinge on regulatory developments and greater clarity from the Fed. That concludes your market update for the 16th of January 2026. Remain calm, zoom out, and stay informed. See YouTube and Spotify links for more information. Thank you for listening to the Leap Podcast.